Good day, fellow investors. I'm absolutely not worried about a recession. A recession is always possible. As Jamie Dimon said, we deal with it, we deal with the issues, with the downturn, we rearrange, and things again later become better. And even you can take advantage of recessions if you are good. Nothing wrong with a healthy recession here and there. But what I fear is absolute and utter destruction. Because recessions mentions here and there, depending on the situation, a little bit more of fear here, a little bit less, and then people don't mention it. So recession is just a recession. It is true that the US hasn't seen a recession for the last 15 years, even a little bit more. So people don't know even how to deal with recessions that were pretty much more common in the past, and you can see that here with the gray columns. Things are good, there was some indication, but now again great economic growth in the previous quarter, so all good. Business investments are booming, AI, data centers, intellectual property, everything looks good. Also, the International Monetary Fund upgraded global growth, economics growth, also the forecast from 2026, all good. Real GDP is growing, even you can see here above the trend growth of 2.1% based on consumption, government spending, and all good. There is a little bit of an uptick in unemployment, but okay, nothing that peculiar. Perhaps a little bit with the young, but that is also something that can be dealt and likely normal cyclical. AI capital spending, hyperscalers booming, this will be the next step in economic growth. Everything is good. Inflation is still doing okay, which means there is demand, there is health, there is everything. And despite inflation going up, the Fed already decided we are going to lower rates because everybody loves lower rates. And here comes the interesting thing. The economic system we live in does not survive on higher rates. That's why the Fed is lowering, not because unemployment this or that. Simply, we don't survive anymore on higher rates. That's how it is. If we look at the federal budget, the deficit is 1.8 trillion, net interest is half of that, a little bit more. If interest rates go up on the 37 trillion of debt, this is 3%. If it goes to 6 on a normal, this becomes half of the budget. Thus, higher rates, real rates, not a financially engineered system is not sustainable. And that's why you need lower rates, because lower rates, more borrowing allow for the assumptions baked into this of eternal growth, of eternal low inflation and lower rates and low unemployment. That allows for 6% budget deficits forever. So borrow like there is no tomorrow, make money as fast as you can, while you can. That is the essence of animal spirits, and those animal spirits is exactly what is driving the economy. This article on Bloomberg that there are now more private equity funds than McDonald's in the United States. If you want a crazy fact, where here you have it. And then again, nobody fears a recession. Even if there is a recession for 6 months, the Fed will lower rates, pump more money, stimulus, and everything will go back on that growth trend. And here is where my worries start. We have seen a stock market bubble in 99-2000. We have seen the 2007, which was a debt bubble. Now we are in 2025. We have had great 40 years behind us, and all the issues that were there before are now bigger. And that's why what I worry is absolute destruction that happens if we get to a 2008-9 moment and the Fed's monetary policy tools don't work anymore. So the more you use those tools, the less effect those tools have. You can see here interest rates over the last 40 years, the trend has been clear. Now interest rates are a little bit higher, but this is unsustainable and therefore we need to lower rates so Trump can lower borrowing costs and everybody happy. Plus, if you look at 2007, it was, let's say, a global debt bubble, developed markets, US, and then there was a break, 2007, 8, 9, and now we have been borrowing again, like there is no tomorrow everywhere. However, borrowing, okay, but if done at extremely low cost, and these are all low single digits for global fixed income. That is crazy, which means that all these, the real returns on that is 0%, my friend. 0% means that nobody's making any money. If nobody's making money, then how does it work? Well, it works if you can sell it to someone else with more debt, and if the, let's say, Ponzi scheme, pyramid scheme, house of cards just keeps on growing. For it to keep on growing, you need free money and lower interest rates. And that works until it doesn't. Some factors already indicate higher delinquency rates, offices. This chart from Bloomberg shows how if you combine PE ratios, forward PE ratios, debt to GDP, stock market to GDP, things like that, you see that the same story has been going on 29, 66, 99, and now again. There is not much one can say. It is impossible to time, but I think the risks are clear. And the components are all there now for what is not a recession but destruction. There is a financial bubble, which is positive for the economy. Low rates, positive. Inflation, positive for those that are borrowing, negative for those that are lending, pension funds, things like that. And likely the majority of purchasing power is declining because of that. So that's an extra tax that goes a little bit unnoticed by the population, but as long as you're making money on your Bitcoin, you're feeling rich and everything is great. The debt, unfortunately, sooner or later will start bite more and more. Higher interest rates, higher costs, and all those investments at some point are not profitable anymore. The Fed, at some point, it can't lower rates anymore, or it has no effect. Then they have to start printing money and buying things, and there is already that expectation that money will be worthless, gold, Bitcoin, things like that. And the key issue is what happens when money printing and lower rates doesn't work. Then all this above trend growth based on consumption, based on government borrowing like there is no tomorrow. There is a cost tomorrow, but nobody cares about that cost. Nobody cares about net interest. And then you have over-levered situations. What happens with such situation after bubbles? Gross domestic product of Japan went down over the last 30 years measured in US dollars. Life is good in Japan, but they live in such houses. We live in such houses. So it's a different cultures. Plus, if we are not from Japan, so we do not do everything the government says, we do not live in small houses, we do not behave peacefully, then we have fundamental issues, politics, we grow out of that with more debt, then somebody says taxes, then riots, then this, then that. And that's all something that I hope it doesn't happen, but it is a concern somewhere at the back of my head. Because when it comes to markets, the first thing that happens is valuation crash. So if this happens, just return to normality, not to the lows, P ratios of 5, 10, just normality, that's 50% down. The delta of the delta, so valuations crash, let's say earnings on something go down, not 2020, but 160 times 15 P ratio, the S&P 500 goes down to 2,400. And earnings went down many times in history and even significantly and have been also flat for a while. And then if that happens, this trend growth doesn't be at 2%, 0%, suddenly if the growth is not as expected at 2%, all these metrics become an issue, the expected. This changes, interest rates changes, and then the house of cards falls apart. That is my main concern. And all that we enjoyed over the last 25 years, over-borrowing, overspending, there is a clear benefit to it from technological improvements. Some investments would not have happened that improve our lives. But from just an economic GDP standpoint, all that reverts. And that has been discussed over and over, especially by Ray Dalio, how you have prosperity, you have a debt bubble, you have a big wealth gap, 90% of stocks in the US is owned by the 10% of people, and then it works until it doesn't. Print money and credit, revolutions, debt, political restructuring, new world order. Long-term cycle, these are the recessions that Jamie Dimon doesn't fear because he always has seen an uptick after the recession. He was not alive during the last long-term debt cycle restructuring. That's why he doesn't fear a recession. Long-term debt cycle historically 75 to 100 years. And then that big debt cycle, we know that we are in the developed world in the late stages of that debt cycle. 75 to 100 years, nobody cares about that. When you can make 20% tomorrow by betting on some crypto coin or Bitcoin, nobody cares about something that might happen between today and 2050. But, as I said, that's the concern, not a recession. And if we are here already now, we do not know what will happen. Then, why do I fear this? Because, unlike Jamie Dimon, I lived through it twice. The first time I was a billionaire was when I was around 6 years old. I had billions of free money. Then again, when I was 10, 11 years old, after a war, this or that, I was again a good millionaire with world-class money. That is what happens when the debt cycles are over-levered. For your information, I'm from here, Croatia. This was once one country, over-levered. We all had built our houses, paid them off for pennies on the dollar, but then we had a war for a few years, and it took the country 25 years to come back to the previous levels. That's something I already lived, overspending. Then issues come up, the debt isn't manageable, and then the house of cards fall. Been there, seen that. Unfortunately, I also seen a war that Ray Dalio says as an option, trust me, nobody wins in a war. So that's also something to think about. I hope it never happens. I hope the debt cycle continues forever. I'm called Chicken Little or Crash or something like that. I'm fine with that. I just hope, because I've seen the pain with my eyes, even if I was a kid, I just hope it never happens. And then I ask AI, did it ever happen that it lasted forever? And debt cycles inevitably revert, temporary boom, repayment downturn, debt outpaces income, interest costs to income, you've seen it grow, and that becomes the issue there. Just read around a little bit from IMF, World Bank economists that are a little bit maybe independent, and it's simply normal that governments around the world have been responding to the ills of that supercycle with traditional fiscal and monetary tools. However, as is well known, these tools are designed to only address temporary cyclical problems, not structural problems such as long-term imbalances. For example, looser monetary policy may help boost demand in the short term by enabling borrowers to borrow a little more, but ultimately such indebted demand will pull the economy back down again. We have at best been kicking the proverbial can down the road, and at worst further impeding eventual resolution of the debt supercycle. Who wants lower rates? Not politicians, it's not Trump. Somebody elected Trump, Japan, and other 5-6 countries all went for the political solution. We are going to grow ourselves out of debt, and to grow we are going to use more debt. Okay, but as soon as the government starts messing with interest rates, that's not a free market anymore, that's government communism. I've been there too. You haven't. I've been there. I lived in communism. I know how it doesn't work. So on that bright note, recession should be the least of our worries. I hope it doesn't happen. If it happens, we might discuss in another video how to be ready, if it is even possible to be ready.